Hello students, I am Dr. Manjunath V from RNS Commerce and Management College, Mysore. Today in this video, we will learn about preparation of cost sheet relating to paper manufacturing industry. As we discussed in our previous videos, cost accounting system can be adopted by many industries. Those industries who are very much indulged in manufacturing activities usually adopt cost accounting technique. One of the example of adaptation of cost accounting system is paper manufacturing industry. In this video, we will concentrate on preparation of cost sheet with respect to various items and expenditures that may incur in paper manufacturing industry. First, let us concentrate on the given illustration. Following information is provided with respect to preparation of cost sheet of a paper manufacturing industry. Observe the titles given. Direct materials. It's not given as a full amount. There are certain items which are usually used in paper manufacturing industry. Those items we need to identify it as direct materials, and some of the items may be related to direct labor and some expenditures may be related to direct expenses. So that's why a specific item used as a raw material or concerned workers and then special expenses are given with respect to paper manufacturing industry. So direct materials here in paper manufacturing industry, direct materials are nothing but paper pulp. A bulk of paper pulp purchased is to be taken as direct materials. So here in this case, 500 tons of paper pulp is purchased at rupees 50 per ton. Instead of units, here it is given as per ton. So that's why we need to maintain a separate column for calculation of per ton. Other materials, under direct materials only, other materials is also purchased by the company. That is 100 tons at the rate of rupees 30 per ton, other direct materials purchased. So there are two categories of direct materials given. Similarly, in direct labor, there are two types of labor workers recruited by the company. There are some workers who are skilled workers and there are some other workers who are semi-skilled or unskilled workers. Both the type of category of workers information is provided, and for them the company will compensate wages for their service. Here direct labor is categorized as two groups. 80 skilled men at rupees 3 per day for 25 days, which indicates 80 skilled workers at the rate of 3 rupees per day of wages. They will work for 25 days. Similarly, there are unskilled workers, 40 number of unskilled workers. They will work for 2 rupees per day of wages and they work for 25 days in a month. Direct expenses. Here, direct expenses amount is not given straight away. There are two separate items are given in direct expenses heading. Special equipment rupees 3000 utilized for the manufacturing of paper. Similarly, special dies rupees 1000. So special equipment and special dies, these two item of expenditures to be categorized under the head of direct expenses. That's what the specific information provided in this illustration. Regarding works overhead, that is factory overheads, there are two types of expenses that may incur in factory overheads. One is variable type of expenses. The other type of expenses is fixed expenses. So variable is to be calculated at 100% on direct wages. So whatever the calculation of direct labor, that is direct wages, the amount what we derive out of direct wages will support in order to ascertain the amount of works overhead. So that's why there is a link between direct wages and then the works overheads. So variable at the rate of 100% on direct wages. the amount of direct wages is not clearly given. We need to calculate the direct wages. Whatever the amount we calculate, on which variable expenses of factory overhead is 100%, and the non-direct wages, fixed factory overheads are at 50%. Similarly, administration overhead is to be calculated at 10% on works cost. So works cost ascertainment is to be made, and after ascertaining the works cost, the 10% of which is to be categorized as administration overhead. On works cost only, selling and distribution overhead is also to be calculated at 15%. So whatever we get as a total cost on which a profit is given at the rate of 10%, that is profit at 10% on total cost. Finished paper manufactured 400 tons. So here output is given, the total number of tons of paper manufactured is 400 tons. When output is given, then we should maintain a separate column as per ton. One more adjustment is also mentioned, that is credit on account of scrap sold rupees 800. 800 rupees worth of scrap is realized. This is also to be adjusted in works overhead. So this is what the illustration. So I advise the students to take note of this illustration, and later we will move on to the solution part. Let us concentrate the solution part now. As we know, the statement of cost sheet, here in this case, particulars column is maintained in order to record the various types of expenditures. At the same time, to amount column is indicated. To amount column is indicated because certain inner column adjustments is to be made for items. So that's why all inner column amounts will be mentioned in the first column, and the second column of rupees is the outer column. And here it is a per unit. Please make it as a per ton. Instead of per unit, you can also mention it as per ton. Also mention it is an output 400 tons, because output is already given. So that's why it is to be taken as output 400 tons. So mention per ton or per unit as per your convenience. So now first item is to be recorded in the statement of cost sheet, that is direct materials. Direct materials includes two types of expenditures. One, paper pulp, 500 tons purchased at the rate of 50 rupees per ton. How to arrive at the value? In order to arrive at the value, for 1 ton it's 50 rupees. For 500 tons, how much? That is multiplications. 500 into 50, so that we will arrive a value of 25,000 rupees. This is paper pulp material purchased. It's not only the paper pulp, along with the paper pulp, other direct materials are also purchased. So second item under direct material is other materials, and 100 tons at the rate of 30 rupees per ton purchased. To arrive at the value, 100 into 30, the multiplication or a product of which is 3000. Two items of direct materials is given. The total of these two is to be mentioned on the outer column, 28,000. Once we arrive at the total of direct materials, this is an important title in preparation of cost sheet. That's why 28,000 is the worth of direct materials for 400 tons of manufacturing of paper. In order to arrive at per unit or a per ton value, we need to divide this 28,000 of direct materials value out of 400. If we divide it, then we obtain 70 rupees per unit or a ton. Second title, for direct materials, we used to add direct wages, that is direct labor. Direct labor, second item is given. Here in this case, there are two types of direct labor, skilled workers and unskilled workers. Information is provided. 80 skilled men at the rate of 3 rupees per day of wages, they worked for 25 days. To arrive at the value of wages paid for 80 workers, we need to multiply 80, that is 80 skilled workers, 3 rupees per day of wages. And how many days? 25 days is the total working days performed by these workers. So 80 into 3 into 25. That amounts to 6,000 rupees is the wages paid for skilled workers. Similarly, 40 unskilled men, they worked at the rate of 2 rupees per day of wages for 25 days. To arrive at the value, 40 workers into 2 rupees per day, 25 days. 40 into 2 into 25, the multiplication or a product of which is 2000. Finally, the direct labor or a direct wages charges amounts to 8,000 rupees, the total of these two. This 8,000 is to be remembered because factory overhead amount is to be calculated on the direct wages. So that's why direct wages is 8,000 rupees. This is to be kept in mind so that further calculations can be made very easily. So once we arrive at 8,000 rupees as a direct wages total amount, for 8,000 rupees divided by 400 to arrive at the per unit or per ton value, that is 20 rupees. Next, direct materials completed, direct labor completed, direct expenses is the third major important component, direct expenses. Two items are specifically mentioned. One is special equipment, directly given as 3,000 rupees, and special dies, it is given as rupees 1,000. Directly these two can be totaled. 4,000 rupees is the outer column amount. 4,000 is the total direct expenses for 400 tons. To arrive at per unit or a per ton value, 10 rupees, that is 4,000 divided by 400 tons. 10 rupees per unit or a ton value. Now, direct materials, direct labor and direct expenses, these three calculations are completed. Now, total of these three is ultimately to be treated as direct cost or prime cost. That is 40,000 rupees in terms of value. If we add up the per unit or a per ton column, then 100 rupees. Next, let us continue from direct cost. Direct cost and prime cost, that is 40,000 and then 100 rupees. First overhead is to be mentioned as factory overhead. Factory overhead, there are two types of information is provided, variable expenditures and then fixed expenditure, both to be calculated on direct wages. We have already calculated the direct wages as 8,000 rupees. Please remember this. We already calculated in the previous slide. So now you need to recall the same amount, that is 8,000 rupees. First is variable at 100% on direct wages. The wages amount is 8,000 into 100%, 100 divided by 100, so that we arrive at the value of 8,000. Similarly, fixed factory overhead, that is 50% on direct wages, that is 8,000 direct wages into 50%, 50 divided by 100, the value of which is 4,000. Next, total of these two is to be retained in the inner column itself as 12,000 rupees, because one more adjustment is also to be made at the time of factory overhead, that is the last adjustment, credit on account of sale of scrap. So sale of scrap to be adjusted in factory overhead. That's why inner column le 12,000 value is retained. Out of 12,000, let us deduct sale of scrap. Sale of scrap 800 rupees minus 800 rupees. Now the remainder balance is 11,200. For 11,200, per unit or a per ton calculation to be made, that is 11,200 divided by 400, which is equal to 28 rupees. Now the total of these two, that is direct cost plus factory overhead, the total of these two, that is amounts to rupees 51,200, and 100 plus 28 is 128, and this total title should be given as factory cost or works cost, that is after adjusting factory overhead, the factory cost or works cost title is mentioned. Now this works cost amount will serve as an helpful hand in order to arrive at the value of administrative overhead and selling and distribution overhead, because selling and administrative overhead to be calculated based upon works cost. So second is administrative overhead. The given information is 10% on works cost. Administrative overhead is to be taken as 10% on works cost. Here works cost is already ascertained, that is 51,200 into 10 divided by 100, that is 10%, 5,120. 5,120 divided by 400, number of tons produced, that is 12.80. Now the total of these two is 56,320 in terms of value, and in terms of per unit or per ton, that is 140.80. 140.80, and this is to be titled as cost of production or cost of goods sold. Please remember, here in this case, the amount of cost of production itself will become an cost of goods sold, because opening stock of finished goods and closing stock of finished goods, these two informations are not available in the given illustration. Under those circumstances, whatever the amount we calculate as a cost of production, that itself is to be treated as cost of goods sold. Even though if we add opening stock of finished goods as rupees 0 for 56,320, it will remain as it is, and minus closing stock of finished goods, nil balance 0. Ultimately we obtain the total of 56,320 only. So that's why no need to show it as a plus opening stock of finished goods and closing stock of finished goods, because when the amount is not available, there is no point in showing those kind of calculations. So straight away we will move on to next heading, that is selling and distribution overhead. So let us continue from cost of goods sold, that is 56,350 and 140.80. Third overhead is selling and distribution overhead. The selling and distribution overhead is also to be calculated based upon works cost, that is 15% on works cost. As we know, already we calculated the works cost as 51,200 rupees into 15 divided by 100, that is 15%, the value of which 7,680. 7,680 divided by 400 tons, that is 19.20 per unit or a per ton value. Now the total of cost of production and then selling and distribution overhead, that is 64,000 in terms of value, and per ton or a per unit column it's 160. So we already calculated now its cost of sales or total cost. You can make it as it's OR, cost of sales or total cost. Now add profit. Profit is 10% on total cost. We calculated the total cost as 64,000 rupees. So 10% on 64,000 should be the amount of profit. That is 64,000 into 10 divided by 100, that is equal to 6,400. 6,400 is the amount of profit. 6,400 divided by 400 tons, that is equal to 16 rupees per unit or a ton. Now the total of these two is 70,400 and then 176 per unit or ton. So sales value, the title of this should be, title of this amount is to be categorized as sales value, that is cost plus profit is equal to sales. The selling price fixed for 1 ton is 176 rupees. I hope this video is very helpful for you to understand the preparation of cost sheet with respect to paper manufacturing industry. Thanks for watching this video, and I will see you in the next video.